Well, a warm welcome. Thank you very much for joining me today. As you can see, I don't have my video on right now because later on some of these charts, you're going to definitely want to see the lower right-hand corner as we had a just absolute carnage at the end of the day today. And so let's get right to it. This is a huge day today. First off, keep an eye on the treasury yield on the 2-year treasuries. That's a big deal. And I'll show you why in just a bit. But take a look. Right now we have the 210 yield curve is essentially exactly flat at 0.007%. We're seeing a widening between the 5-year treasuries and the 10-year treasury yields. The yield curve is kicking in. The flattening of the yield curve is kicking in, and it's portending recession. But let's move on quickly. 3-month LIBOR backed off just a little bit today at 0.97%. Here's one of the first charts. Think of today as being an inspector. Think of Columbo, if you will. You're looking for clue, or in my case, maybe Inspector Clouseau. I don't know, but anyway, you're looking for clues at the scene of the crime. And so one of the first clues that we see is right here around 11 o'clock on the 2-year treasuries, and then into the close on the 2-year treasury, where you can see this spike up at 11 o'clock is some entity dumping treasuries, okay? Dumping something that is, and why a 2-year and not, say, the 5-year, the 10-year, the 30-year? The 2 years treated much more like currency versus the 5-year, 10-year, 30-year, which are treated more as investments. So we have an entity looking to get rid of the most liquid investments that they could. Okay, so let's move on from that assumption. We have an initial spike around 11 o'clock. 11 o'clock, I'm talking Seattle time, 2 o'clock Eastern time. Then heading into the close, into the last hour of the day, huge spike that came back in the 2-year treasury yield. So some entity was dumping in a big way, and I think we've identified who that entity is, possibly, and we're going to leave that for the last PowerPoint chart. So let's move through here quick. You can see the 5 years, not much going on, just kind of pulling back in rates. That's good. So money coming into the 5-year, 10-year treasury, same thing. 3-month hourly kind of pulling back. 30-year treasury, same thing. We're getting a pullback in rates, I should say. 30-year fixed, 4.875. Okay, that's 4.78, excuse me. And the 30-year, 4.13 on the 15-year. Okay, let's move. Latest estimate on GDP now, 1.3%. That's bumped up a little bit in the last couple of days. Okay, nice. From 0.9 to 1.3. Okay, that's a nice little bump. Let's move on. Here we go. Take a look. First off, this is the 3-month hourly chart, and you can see the last hour of the day. See two things. One, obviously, the precipitous decline, closing right at the lows of the day, and then the massive spike in volume. Now, we had a total blow up the last hour, but it really picked up speed at the very last minute of the day. Literally the last minute, the last 1-minute bar of the day. You can see the volume spike. You can see that some entity was dumping not only 2-year treasuries, but somebody was dumping stocks. And whether we're talking S&P, NASDAQ, Dow, doesn't matter. They're dumping stocks. It was a liquidity issue. This is forced liquidation. So let's move on to the next slide. Hopefully, I took a screenshot, or excuse me, a screen record, so you can see the increase in volume during the last hour. And let's move on to that. Okay, so let's see if we can get this thing to work. There we go. Screen record working. And look at the box. Once I get this thing jiggered in there, right? Okay, there we go. Starting at noon, take a look at the V in the box where it says that's for volume. And you can see where we're trading 500,000, 600,000, 800,000 shares a minute per bar. and then it starts moving up and up and up and up, and we get some spikes. 4 million shares, 4.7 million shares, pulls back down. 5.8 million shares, 4.6 million shares, 5.8 million shares, closed off 19.3 million shares the last minute of trading today. 19 million shares. Wow. Wow. Okay, so who is the culprit, we may ask? Well, we're just taking a look here at the, excuse me, this is the 3 month, is this the 3 month? No, this is the 1 minute chart, excuse me. Poor titling on my part at the top. This is the 1 minute chart of today. You can see the same thing was going on in the S&P. My apologies for not titling this properly. And then again, same thing on the NASDAQ, okay? You can see just the collapse that occurred at the last minute of the day. Certainly that's not all the damage, but it was very interesting. Now, who's the culprit? Okay, I shouldn't say the culprit, but the prime suspect. The prime suspect, I had to make another video because I had created this video, then I go into zero hedge, and I'm like, oh, there's the prime suspect right there. So I had to make a new video. Because here we go. People's Bank of China raises billions to bail out. Aha! This was forced liquidation. This is a problem. This is a big, if this is correct, big but if I've connected the dots properly, this is just the start of these problems with China. It's not a one-off situation. It is definitely something to keep an eye on. Definitely something to keep an eye on. Anyway, have a wonderful day. We will talk to you again tomorrow. Take care.